Seb, good morning, man.
Morning.
How are you?
I am doing just fine. How about yourself?
Well, you look much better than I do. Although I will say I'm wearing a very special sweatshirt that you gave me, which I'm
That
very
is
proud of. Of
that's my favorite garment right now. So thank you for rocking that for me.
course, of course. I want to get into that, by the way. But
Okay.
hey, let's we only have 30 minutes, and I mean I could spend 2 hours with you, but I want to start with something, if you don't mind. It's a little personal.
Okay.
Since you and I become friends over the last few years, you are one of the most driven people I know. And I've learned so much from you as we've hung out over the last few years. Just where do you get that drive? Let me just start with that, because like you're one of those people that like a lot of famous athletes who say I'm going to outwork, out hustle. Like I kind of see that with you. Where does that come from?
I appreciate that. I'll try to boil it down to this. We started early with little Alexis. I think we were 23, 24 at the time, and we were in a one-bedroom apartment, and Alexis lived in the closet for the first 6 months of her life. And so I think that you just sort of have this. I'm sure you can imagine, you can relate. You have this come to Jesus where it's like, if I don't really find a way to beat the odds, then this person's going to live in the closet for the rest of her life,
Yeah.
or something. And I guess it all boils down to the fact that I'm a dad, and I take it very seriously, and I just want to give them the advantages that I could only have dreamed of at
Yeah.
that age.
And maybe just for folks who don't know you, to talk a little about what you're doing right now. I mean, I could give the overview and I'll add in my 2 cents because I know it pretty well, but tell everybody what you're up to right now and sort of what brought you to where you are.
Yeah, I'm doing a lot right now. So mainly it's building 2PM, which is a B2B media company for the commerce and media industries. We study the intersection of where retail meets audience and brand. We have a holding company with now 22 investments. We're actually about to make another pre-seed stage investment right now that I'm really excited about. So as we've grown, our deal flow has improved quite a bit. I'm really excited about that. I also maintain an operational role in the direct-to-consumer space. So as of recently, I took an executive role with one of my portfolio companies, Growing Blazers, helping them navigate the next 6 months of hypergrowth. And so we have some pretty cool investors coming on board there as well.
So you've got a media company, which kind of combines media and research.
Mm-hmm.
You've got an operating role at a high growth DTC company.
Yes.
And you've got an investment portfolio that you've created as part of the umbrella under the media company.
Yes, I saw the investment portfolio as a new way to monetize the email company.
Yeah.
Taking cash flow, converting them into long-term equities, essentially, just by investing off of the balance sheet. I'm not independently wealthy yet, obviously yet. Yeah, I'm still waiting to cash out a few chips, but I'm trying to, I think 2PM itself is doing really well, and it's allowed me to become that type of investor a lot earlier than I originally thought.
Yeah. I know you've got some pretty strong views on where the market is going. And obviously we had a massive inflection point this year around e-commerce. Can you just kind of talk a little bit about the high level where you see retail, e-commerce, DTC? I know that's hard to wrap into a short and pithy conversation, but
Sure.
Just put it out there.
Yeah, sure. So there's two things to note here. I think the most important thing is to always look to China to help explain where we're going to go stateside. They seem to be leading us typically by 3 to 5 years, but at the very least. So
there's certain venture firms that have built their firm on that thesis.
Really? Can you tell me about those? No, obviously GGV has done a wonderful job of navigating the global politics of those relationships, and they've done some amazing investments on China's mainland, as well as used those learnings to do great business here as well, which I think is amazing. China is probably close to 40% e-commerce as a percent of retail right now. So naturally, where China goes, we follow. I suspect we'll probably be there in, let's say 5 to 7 years, whereas originally we were supposed to hit something like 20% by 2020, 2026. So we've accelerated the pace by about a decade in the last 6 months. The other thing I would say, as it relates to direct-to-consumer, DTC, as people call it, it's a very insular community. Not everyone cares about small brands and Shopify, but I do think that if people focus on the philosophies gleaned by those companies. Those philosophies are applicable across all industries. I think that we're starting to see that in telemedicine, in media, in car sales, home sales, all across the country.
What do you think happens with physical retail? Shopping malls, shopping centers, physical retail. Like I know you got some strong views there.
Sure. Yeah, I think it's really simple. We are still over retailed, despite what every commercial development company tries to say right now. There's going to be a reckoning of sorts. I think we are at 23.5 square feet per capita. And to compare, Canada's at 16. Europe is typically around 12. China's at 6.
And just to break it down, you're saying we have more physical retail space per person in the US than any other country.
Any other country, by far. So 30% more than Canada, almost double Europe, and 4 times more than China. And obviously China's an outlier here, but you can compare us to Europe and Canada pretty easily and still note that we are over retail. As e-commerce continues to explode, we're going to have a lot to do with these buildings. I don't really know what that looks like yet, but what I do know is that a lot of the tier B and tier C malls are evaporating quickly. Simon can do all they can to prop up a lot of the dead brands, but eventually, I feel like, you buy toxic assets, it's going to come to bear.
And if we've got, some folks that I connect with on Twitter who are public investors. And one of the things that people like to talk about is the fact that like a Lululemon, a Nike, Best Buy comes to mind as companies that have done a pretty good job of pivoting into a digital world that kind of combines physical and online. Who else do you see doing it well? Number one, number two, is there, does that model exist, in 10 years? Is it a combination of physical and digital? Where do you see that going?
Great question. You cited 2 companies that are doing great things for different reasons, or with different meanings rather. So Nike's obviously, I want to say they're upwards of 30 to 40% DTC right now. They announced that in their most previous
I think the announcement was that they hit their 5-year goal in like 12 months.
Right. It's amazing. Yeah. And then for Lululemon, Lululemon is hedging against the downturn in physical retail by, with their acquisition of Mirror. Listen, first and foremost, they're going to be fine regardless because they're in the best malls. They have the most loyal fan base, but they're still hedging by building a new channel, a new media channel to acquire customers. And that's what the Mirror acquisition was all about. You're going to see a lot of.
So you like that deal? You think that was smart?
I think that it's going to work out for them really well. I think people right now see it as a fitness play, and I see it as another channel to sell products. So when you see Lululemon gear on all the coaches and units sold through the app, I think it's going to begin to make sense for a lot of folks.
Well, you kind of have Peloton going the other way, right? Which is they're selling their own merch now, in addition to the bikes and the subscription. So I guess if I'm thinking about what the future sort of small regional shopping center looks like, that's a tier A location, you think it's going to have a combination of some physical, are there new formats that people are creating? Are you seeing anybody experiment with, what could come in 21 or 22? We're all going to go, of course that happened, in a post-COVID environment. Any thoughts on that?
Yeah, I do. I wrote about this pioneering architect from the 1950s named Victor Gruen. He was an Austrian immigrant that is one of the forefathers of the American mall. The original vision that he had for the malls resemble the top malls of today, with the exception of a few. Those malls are mainly outdoors, meaning they're not enclosed malls. They have their own communities around them. So you're talking about high value condominiums and purchasable homes, and in the development itself, entertainment, grocery, all of it. So it's like its own enclosed.
Yeah, you kind of have that, like we have that at Santana Row in San Jose. It's a combination of work, live, restaurant, some kind of high end, but it's not like big box in Santana Row. Now it's nearby, but
yeah. So in Columbus, if any of you ever want to make a trip out to Columbus, Ohio, a great example is Easton Town Center, which is its own city at this point. It's expansive.
By the way, how much of an advantage is it for you in this space to be in Columbus? I mean, it's funny, people in Silicon Valley and elsewhere don't realize how much of retail and consumer brands is based in Columbus, but like how much of an advantage is that for you?
Well, I guess the jury's still out on that. Here's why. I have all this insight from all these major retailers, L Brands, Victoria's Secret, DSW, you name it, Casino Retail, and then obviously Easton Town Center, which is like the preeminent mall in the Midwest. And so when I say things on Twitter, for instance, like, hey, this is what I'm observing.
Right.
They're not based on opinion as much as like, this is what I'm being told behind closed doors and I'm actually allowed to share with you.
Yeah,
and so to get the pushback sometimes, like, guys, I'm just telling you what they're telling me. Like,
I'm not making this up.
Right. So I look forward to getting over that hump and just having people realize that Columbus is such a wonderful place for the study of retail because it's the epicenter of traditional retail.
And if I switch gears, maybe to talk more about the up and coming kind of DTC space, a lot of hype around a lot of companies that raised a lot of venture capital. And I know you were a skeptic on a lot of them, but also bullish on a number of them.
Sure.
What's your synopsis of what's happened over the last 2 to 3 years in that space? And then I've got some follow-on questions there as well.
Yeah, I think that we're starting to see the benefits of companies that are economically sound early on. These are the companies that maybe didn't raise the $20 to $60 million out of the gate, and they have to work on their, their unit economics early on. I look for founder and product fit just as much as product market fit. And so these are the founders that can drive the brand until the brand can drive itself. That's advised my personal investment portfolio.
It's kind of an old school, like I always tell people, if you read Shoe Dog, Phil Knight didn't raise 60 million in venture capital. So your mentality is, more of an old school, like build a real company with real demand and real margins and real distribution.
Yes.
And we got away from that for a few years.
Yeah. I think that, building a brand is a 15 to 20 year proposition. So that's not very venture backable. If you ask me, not traditionally that is. And so I look for brands that are doing it the hard way, which sounds really sort of pithy, but that's really the only way. Obviously, Allbirds is going to be fine. Warby's going to be fine. Harry's, maybe even Away. They'll probably be acquired by some SPAC. But, really at this point, that's probably their best shot. But, I'm sure Allbirds will go public. But anyways, the point is.
But you think there's a next generation coming that are disciplined, well-run, aren't raising a huge amount of money at crazy valuations, and those companies will be good companies.
A great example is probably Andy Swim. They only raised $2 million until the announcement this week where they raised 6.5. But everything that I know about that brand, that they're well into the Andy Swim.
Andy Swim.
Yeah, ANDIE. Founder's wonderful, and she's doing great. She's doing a great job leading that company. They're well into the 8 figures already. Wow. Already profitable.
On $2 million raised.
Yeah, on $2 million raised, and they just finished raising 6.5 for probably hypergrowth. That company's way better prepared than the company coming out of the gates with $10 million and no plan.
That's awesome. So what are companies doing today to scale beyond kind of 10 million, 20 million? Because if I go back 5 years ago, everybody just raised money and dumped it into Facebook and, sort of prayed that the CAC to LTV ratio would work out over time. What are you seeing happen today? Are people using other channels? Are they getting creative? Are they building content? Like, what are the best companies that are scaling beyond that kind of $10 million hurdle? What are they doing?
I think the majority of these companies are looking to build audiences of their own, or they're looking to co-opt existing audiences, whether that's partnerships with creators. There are a number of platforms like Paid from Toronto that essentially pairs brands with viable creators to help you reach their audiences. You can sort of game the system by whitelisting your message through their organic audiences. And that's a cheaper approach than traditional Facebook marketing. So there are a number of ways.
Who's doing it well at scale? Who's doing the content, brand, commerce?
So I think that the knee-jerk answer is always Glossier, but I'm going to take it the next step. There's a company called Mischief that I don't know if you've heard of. They are quite a mysterious company. They have e-commerce drops probably every 6 to 8 weeks.
It's called Mischief?
MSCHF.
Okay.
Fascinating company. I want to say they are venture-backed, but they are doing wonderful things by fostering their organic community, organic audience, and leveraging it into e-commerce sales that typically sell out within a day or two.
Yeah, that's cool. That's cool. You know me well enough to know that I'm probably not the early buyer of a lot of these things,
I
but
do.
my kids are. I always tell my kids, like, guys, you know what I do for a living, right? Like when you see something cool, will you let me know? Um, but
That actually reminds me of my oldest daughter telling me about Musically 4 years ago. And I'm like, whatever, Alexis, get over it. I wish I would have listened.
it became big. Fortunately, that was a good one for us. Um, so let's talk about, okay, so we go through this pandemic, e-commerce just takes off, right? I mean, this year you look at the stock of Etsy, Amazon, Shopify, anybody that's been affiliated with e-commerce is booming. What happens
E-commerce.
next year? What happens next year?
Yeah. So I think the long and short of it is, we're probably going to enter a period of second wave adjustment. I believe that, regardless of which administration takes over. And I do think that eventually the traditional American consumer will grow tired of the measures that we're having to take to go to grocery stores.
You wrote a whole post on this
I
that
did.
was great. Yeah. What was it? What was it called?
So there are two actually. One was called On Reading Waves, and the other one was called When the Dust Settles.
Yeah.
And so the to encapsulate it, we are going to reach a new normal, and that new normal is going to be more friendly to e-commerce first retailers. I'm not going to say that traditional retail is done. I'm not going to say that they're not, but you're going to see a blend of the two that far benefits the digitally native brands that are focused on e-commerce right now.
And do you think I mean, as part of that, do you have a view on what happens to traditional malls just become, I don't know, residential, or what happens? They become distribution. People talked about them becoming big distribution hubs. I mean, do you have a view on that, or do you even care?
I think that malls are important. I'm not anti-malls. I just know that there are going to be two types of malls: the malls for the working class and the malls for the upper middle to the wealth class. And there's going to be very little in between. So it's all the retailers that are super focused on appealing to the middle class that are struggling right now, because the middle class is bifurcating. It's not all bad. Either the middle class is becoming richer or they're falling into the working class. But the vast majority of folks, me included, have come essentially out of the middle class into sort of a higher standard of living. And that's had an effect on the types of brands that appeal to us and the viability of those brands.
And this is one of my takeaways from your post, was that the brands that see that opportunity, that kind of aspirational, I guess you put Lululemon, maybe even put Nike in that category.
Sure.
Are doing well. What's that?
Look at what Nike's doing right now. They've taken their clothes and their shoes out of all middle class retailers, with the exception of Dick's Sporting Goods and like Pivot Sports, I want to say. So they've gone direct to consumer, most importantly. They're launching their own stores more often, but they've also removed their products from lower value.
Yeah, it's funny. One of the things I think about when I was a kid, Polo Ralph Lauren was this really aspirational high end brand. Mm-hmm. And then they started selling it in all the outlet malls. And I think it just went, I don't know where it is today, but it sort of just, I think Under Armour kind of did the same thing. Like they kind of just missed the zeitgeist of how you build brand.
So I can tell you that both of those brands are actually focused on the same strategy that Nike has executed so well over the last 6 months. So you're going to see
they're trying to follow it now, pulling product out of. Oh, interesting.
Well, so you won't see Polo at Kohl's and Dillard's and JCPenney and maybe even Macy's, but you're going to start to see more owned retail locations.
So Nike's is the role model here that everybody's looking at.
Yes.
Wow.
Yes, and Under Armour's working on the same right now. I know that actually, and Nike's sort of devised the playbook for that.
Interesting. Yeah, Nike's kicking ass. What when you think about, okay, so I asked sort of what are DTC companies doing to get past 10 million? Let's assume we see a bunch that are at 100 million or 200 million in that space. What do they have to do to scale and eventually be a public company and become the next Lululemon or the next Nike? Because, if I think about I don't know how many billions of dollars went into funding all these companies, but it's billions.
Yeah.
And everybody kind of today cites, oh, well, there's Warby, there's Allbirds, but like none of those have become breakout, multi-billion dollar companies. When does that happen, and what will we see when it does happen?
Again, I think that these are the companies that have done things the slow and hard way. There's a number of companies.
So they're coming. They're coming right now.
They're here. We just don't talk about them, right? I mean, you look at Rogue here in Columbus.
Rogue Fitness.
Rogue Fitness employs 1,200 people.
Wow.
Operates out of over 1 million square feet in the middle of the city. No one talks about them in the mainstream press, but they are one of the biggest and best e-commerce companies I've ever seen. And then you have companies that, Butcher Box is an example out of Boston. They are a large company that no one talks
Butcher Box is an online meat store, I think.
Yep.
Yeah.
So they have complete.
I always see their ads and I'm like, God, I need to order some of that.
They are, when I tell you that they're crushing it, they're absolutely crushing it. I don't even like using that phrase, but they are a lot bigger than people think, and they've just done things the long and hard way, and they've done it without venture capital. So,
wow.
Unless you've raised money early, you rarely hear about these brands. But I think that if you really focus on the brands that people don't talk about as much, you're going to find a lot of nuggets there.
Last question, then I want to switch gears on DTC and retail and e-commerce.
Sure.
Are you seeing folks tap into a vein in terms of customer acquisition and brand awareness that maybe the rest of us aren't aware of? I mean, we know about billboards, we know about TV, we know about Facebook. Is there anything new that people are doing that you're like, oh, that's like the thing where we're going to see spend start to go next year?
Well, I don't know about traditional spend, but I do know that you can use Rowing Blazers as an example here. Imagine a smaller brand. This is a brand that's 2 to 3 years old, in the 7 figures annually in year 2. And they partner with much, much larger brands because they have credibility that these larger brands want. And that essentially that partnership sort of provides a halo effect that lowers customer acquisition costs for them in paid channels by giving them more top funnel awareness. That's a tactic that I wish more direct to consumer brands would focus on. So it would be, Adams working with, pick a very clear leader in the category, or, Andy Swim partnering with the leader in swimwear. Those are the examples that I wish people would follow a little bit more. Because they're going to find that their paid marketing costs are going to decrease with those efforts.
I also think your thesis on content and commerce, I mean, we've always believed in it. It hasn't really taken off here. We're early investors in House. Over in China, we have a company called Xiaohongshu that does this well. But you look at the whole influencer economy and TikTok, you look at the brands that some of those folks are starting to create. It just feels like the next iteration, I guess maybe the Kardashian, Kylie Jenner sort of, you could argue, really cracked the code on that model here in the US. But am I right in thinking that that could be a big avenue coming up in the next few years? Well,
yeah. I mean, there's a number of lesser known folks in that category that are doing great things. I mean, I don't like any of them personally. They're not my style, but you look at the Nelk Boys. I mean, those guys are doing $70 to $90 million in e-commerce every year.
Wow.
No one even talks about it, right? And they're YouTube driven. I think it's important to step back and look at the more corporate structured media companies that are doing this well, though. I think this is where Chernin does a great job.
Mm-hmm. They bought Barstool.
Barstool is doing 150 million a year plus. I lost track.
And merged with Penn Gaming, I think.
Yep.
Yeah. Actually,
Anthony
Pomp had it on his podcast, had Barstool Dave, which folks should tune into. It was a great episode.
Great.
Just talking about that intersection of the content they create, and I love that episode.
There's a funny part, really quickly. There's a funny part where they're discussing their personal wealth, and Dave was like, "Are you richer than me?"
I know.
And Pomp's like, "No." He's like, "Okay, good."
Yeah, I know. He goes, "Wait, are you richer than me?" And he goes, "No, not yet." And he goes, "Okay, good." The other part I loved was when Anthony told him that he eats Domino's pizza, and Dave goes,
"He lost all credibility."
Wait, what? He's like, "Wait, what?" He's like, "What do you do? What do you do for a living?" And Pomp's like, "Oh, I invest." He goes, "Because the whole Domino's thing, that raises questions."
Sure,
It offended him.
I died laughing when I heard that. But no, like, so Barstool is the quintessential media brand at this point. Though obviously they are a divisive group, but mechanically they do a wonderful job. Food 52 is in that category. There are a number of retailers that I would put there as well.
Amanda and the team at Food 52 are great. I love what they're doing.
Hodinky's there.
Yeah.
That's right. So, Hodinky. Yeah. I mean, these are all organically driven e-commerce powerhouses.
I love that trend too, because they feel authentic, right? They feel like you're not on like BuzzFeed reading about watches. You're like on a really watch geek site or a foodie site.
You have to really love watches to like Hodinky.
Yeah.
I like watches. I don't love watches.
Yeah. So I like them and I don't really buy them, but I think some of the stuff they put on there is cool. Hey, we got about 4 minutes. So let me, you and I spent some time over the last few years talking about race, in tech in particular, and I'm wearing the Higher Wire sweatshirt.
That's the best one.
I'd love to. I've learned a lot from you, and you've helped me and helped our firm think about this a lot. What have you seen? And I guess over the last 3 to 6 months, any positive changes that you've seen is one question. And the second question is, what advice do you have for folks who might tune in on what they can do personally to help drive change forward, right? Because the reason I ask this question is I see a lot of people saying, oh, I donated to this or I donated to that. And my response is like, hey, that's great. Yeah. But the and is you're a founder, you're a CEO, you're a board member, you're an investor. There are things that you can personally do to help change the narrative as well. I'd love to just, first part, have you seen anything change in the last 3 to 6 months, maybe positive signals you could point to? And two, what advice do you have for folks?
Yeah, I think that the few changes that I've seen, there has been change, positive change. I've seen a lot of folks raise money, a lot of funds being built around these theses, LPs really putting their money where their mouths are and helping young Black investors raise their first funds, not small funds anymore, like not $1-2 million micro seed rounds, but I'm talking like 15, 20, $25 million. I mean, Harlan Capital, for instance, congratulations to those guys. Mark Cuban cutting a $6 million check to Harlan, so on and so forth. The list goes on. More importantly, I think that on the higher side, that's the wire side. On the higher side, I think it's been fun to watch a lot of companies that I know and love hire consultants to help them figure out what they need to do. I get a lot of those messages in LinkedIn from those consultants asking me, like, how do you navigate e-commerce and the lack thereof here? And they're really asking the questions and really trying to find the right answers. And there are people like my friend Jonathan Poma here in Columbus. He will send me a graph of his hiring progress every single month. And I can tell he's so passionate about it that it almost makes me mad. I'm like, man, I get it. I'm doing something else right now, but thank you for the update.
Yeah.
He's looking for that much accountability. And so he's putting his money where his mouth is. I mean, they just finished raising money from First Mark and they're building a mega business. So the fact that he's focused on making his company
it'll make a difference.
It'll make a difference when they exit, and they will. When you have some new millionaires with money to show for it, and that's how you build it. So, yeah,
on my end, I can tell you, I'm seeing an unprecedented level of focus and action. Right, people are changing their hiring practices. People are, one of my frustrations over time has been that we have all these empty board seats. I mean, hundreds of them in venture capital and independent board seats that go unfilled year after year after year. And as much as we prompt founders and CEOs to fill them, it just wasn't a point of urgency. And I think over the last year, I've seen a lot more folks say, hey, I can appoint a, minority or underrepresented or, whatever it is to that board seat and make a difference. And oh, by the way, have a better fucking company, get good advice, get good input, and have a better company. And so I could probably list at least 10 or 15 of those in our portfolio just in the last 12 months, which is just a huge positive in my mind.
Yeah, I think that people are going to realize soon enough that getting rid of the blind spots in their organization is a competitive advantage. And that's what, that's not to sound corny, but like that's what diversity on the board and diversity in the C-suite, people with power that can actually speak up without fear of retribution or,
Yep.
That's where that comes from.
The other thing I would say is, we have companies that have grown to over 1,000 people that never took it seriously early on.
Mm-hmm.
It's hard to change later on. And so the thing we're trying to impart to founders and CEOs and board members is tackle this early, guys. Tackle it when you're 10, 20, 30, 40, 50 people, because then it becomes part of the culture, part of the DNA. It just becomes part of the way you do business as a company and not some initiative later on.
I'll give you a prime example. I don't consider myself to be like a civil rights leader or anything like that. As you know, I'm really focused on the job and the numbers and scoring touchdowns. And so like, let's just say that a very large publicly traded company offered me a C-suite position not too long ago. And the first thing I said was, I'm not going to be the only person in that building, guys. Like, I just don't feel like dealing with it. I've been there before. I know what that feels like. And so if you don't start to handle the problem earlier, then you're going to get to the point where people are unwilling to sort of take their chance on you once you're at enterprise size, and you want to hire the right person, And so hopefully they took that and they'll make the necessary adjustments.
Yeah. Well, I'm seeing positive trends, and I hope we keep the pressure on. I hope it continues and doesn't become a 2020 thing. So, hey man, anything you want to ask me? I'll give you one question for me.
Yeah. So I joke around and ask you how you stay so youthful. So I won't do that. I won't waste people's time here. But where do you see GGV going next with regards to telemedicine and the digitization of other industries? Where do you go from here?
It's a great question. I wish we were deeper in healthcare. I think healthcare and health tech is going to be a massive opportunity. The guys at Lux Capital just announced they're putting a bunch of money to work in this space. Andreessen's been doing a lot in the space. Venrock, Brian Roberts, arguably the best. It's an area that we've been sort of historically under-focused on. We just don't have the expertise inside the firm. It's something we've talked about. But I think that health, the merging of health and tech over the next 5 to 10 years is going to be not only just an amazing investment opportunity, but I think an incredible thing for society. You saw Clover is merging with IPOC, which is Chamath's SPAC. I'm on the board of a company called PlushCare that does telemedicine. They're having a record year. So I just think, Livongo and Teladoc merged. Like, there's a bunch of good energy happening around. Honestly, one of the biggest constraints historically in healthcare has been regulatory. And so the real question is, do people in DC care enough? And hopefully this pandemic will cause people to care enough to break down some of the barriers that have made it really hard. Like, you couldn't bill through insurance for telemedicine as of a few years ago. Like, that's ridiculous. The internet's been around for 20 years. So breaking down some of those barriers, hopefully partially due to a global pandemic, which has been terrible, will be good for us over time. And then for us as a firm, we've been big on e-commerce. We've been big on software. We've been big on open source and infrastructure and developer tools. And I would say one thing that's really cool for us is enterprise software is starting to really take off in other parts of the world. China, India, Southeast Asia. You're starting to see large corporations buy and build, modern day software, which I think is going to be a huge opportunity. Obviously, it's $1 trillion category in the US alone. We're starting to see that in other parts of the world. And so that's a big opportunity for us as well. But we got to keep doing what we're doing. I'd love to be doing more in healthcare, but we got a bunch of other stuff we're focused on, and it's going reasonably well, thank God. So we'll keep doing what we do.
Awesome.
Thanks for coming on, man. I appreciate it. I know you're busy. I know you're traveling. You're not even at home right now, but it's great to see you. And thanks for doing it. And hopefully everybody appreciated all the insights. So thanks, man.
Anytime. Thanks, Jeff.
Okay. Take care.